Good morning, you're watching Bloomberg Quint. I'm Darshan Mehta. It's a brand new show called All You Need to Know. It gives you a complete wrap of what's buzzing in trade. So let's start with what's happening as far as the trade setup is concerned. Overall, if you're looking at the Nifty, as SGX Nifty at this point of time, it gives a much positive outlook. At one point of time was up almost 55 points. Now has moved down to down a little bit, but still up in the green. So the Nifty futures probably can see a level of 10,400 in trade today. What else can we expect? Let's look at the ADR. ICICI Bank ADR fell in almost 0.3% to 2%. This was after an intraday gain of almost 3%. Tata Motors ADR ended up 1.5%, and HDFC Bank ADR also did well for itself. HDFC Bank ADR was up almost 2% in trade. Let's take a look at how the commodity space is panning out. Let's talk about crude. Crude has gained for the fifth day. It's up almost 6% in the past 5 days. So that's the cues that we are getting in. And it's a good rally for the crude because Brent is trading above the $60 mark. WTI is trading above the $54 barrel mark in trade. So that's very, very important. As far as commodities is concerned, weak close for the base metals on the LME. Most of the base metals were down in trade. You take a look at how they have closed. So basically, lead, copper, all of them fell in over 2% in trade. The other base metals like aluminium, zinc and nickel were down almost 1% in trade. Even in China, the opening has not been the best. The base metals opened down weak. China is down anywhere between 0.5% to 1%. Apart from it, let's take a look at how gold is trading. Rubber and steel are opened lower in China. So not the best days for commodities. Gold is also trading rather muted. There's no cues coming in. It's trading muted in early morning trade. Now, as far as the fund flows are concerned, FIs were net buyers of almost, they sold in almost 650 crores in the cash market. DIs, minuscule amount of buying happening by DIs. But the month to date indicates that FIs are net buyers. They bought in almost 1,700 crores in the cash market for the month. And DIs have bought in almost 9,984 crores in this month. So extremely strong DI buying that's happening. As far as sectors are concerned, Nifty Pharma and Nifty Metal did extremely well. Nifty Pharma was led by gains because of Sun Pharma. Apart from it, if you're looking at what didn't do well, the PSU Bank Index fell in almost 4% in trade. How are we panned out for trade and what actually happened as far as stocks are concerned? So TCS, Sun Pharma, Tata Motors were the major contributors, and on the downside it was dragged down by Reliance, SBI as well as Bharti Airtel. But Agam, what's the FNO scene like?
Well, in terms of futures and options, what we notice is that when it comes to the Nifty, it's held on to the mark of 10,300. However, we did see a little bit of a correction there. That said, in terms of how we've seen the futures pan out, we're looking at about a 2.7% increase, but with very little change in terms of the underlying index itself. Moving on to the Nifty Bank, we have seen a marginal unwinding where your open interest has declined by as much as 0.7%, whereas the index itself has moved down by as much as 0.7%. In terms of volatility, while we did see a lot of movements on Friday, the VIX eventually closed with a decline of as much as 1.3%, still below the mark of 12, in fact, at around 11.5. Moving on with the put call ratio also moving down further to around the mark of 1.37 as against 1.4. But in terms of options changes and the kind of change that we've seen in open interest, the most active options were the 10,300 put, where we saw a lot of writing, and resistance builds now at around 10,700 calls. So we could see a little more resistance coming up from that level at around 10,700, 10,600. Moving in, we are keeping an eye on JSW Energy, which moved into the band, so we could see some restricted trade there, but fresh longs seen as far as VGuard is concerned, about 59% added in terms of open interest, and of course the other counter which also saw substantial amount of open interest towards fresh longs is Ajanta Pharma, which saw around nearly 26% in open interest. So on the whole, we'll wait and watch for how these mid caps react, and also how we see the development of the benchmarks going in today's job trade.
Stock of the day has to be Ramkrishna Forgings. The company has reported good set of numbers over the weekend. Revenue has grown as much as 114% at 333 crore as compared to 156 crore in the base quarter. While the EBITDA, the net profit, the company has reported a net profit of nearly 23.5 crore as compared to a loss of nearly 5 odd crore in the base quarter. EBITDA is up as much as 132% at 65 crore, while the margins have expanded to 19.5% as compared to 18% 10% in the base quarter. So what has led to an impressive set of numbers for the company? While good top line growth has reflected well in terms of the bottom line. Also, if you look at the revenue, both domestic revenues combined with your export revenue of almost double on year-on-year basis. This combined with control processing charge, finance cost and employee costs had percolated down well in the bottom line growth of the company. However, volatility in steel alloy prices to certain extents have capped the gains seen by the company in terms of its earning. Well, what's working well for the company, because the company has recorded third straight quarter of profits, continued upswing in demand of Class 8 trucks in North American market, and a continuous enrichment of its product mix. This combined with the gain in market share, which is driven by a strong upsurge in the domestic CV industry. Just talking about the stock, a little bit about the background about the company. It's a metal parts supplier and has a market capitalization of roughly 2,300 crore. It's the second largest forging player in India that we have. It manufactures products for automobile sector, which forms nearly 60% of the revenue, and 10% of its revenue is contributed by railway sector. Also provides products for defense and mining sectors, and some of its key clients includes in the likes of Tata Motors, Ashok Leyland and Eicher. In terms of stock performance, the stock is comparatively trading at a cheaper valuation as compared to its peer, almost 30% discount seen at its 1 year forward PV there. Good stock run. If you see 1 year price performance, it has grown as much as 107%, and on YTD basis, it's as much as 151%.
Let's shift focus to the forex and the commodity space and look at what are the cues that are coming in. Starting off with energy prices. Now Brent has topped the 60 mark for the first time since 2015. Now there is optimism that OPEC may extend the output cut deal through 2018. Qatar has also made a statement in which they say that oil prices are now moving towards the fair value. What has not really done well is the base metals and the precious metal space. So gold has declined to the lowest level since August. The dollar index has contributed to this by gaining to more than 95 as of Friday's trade. Most of the base metals closed lower on LME, led by copper and lead, which was down more than 2%. Other base metals like aluminium, zinc and nickel too declined in trade by more than 1% on the LME. And we are getting similar cues from the Shanghai Futures Exchange, where most of the base metals and rubber prices are trading soft. But Saloni, take us through some of the cues that you're picking up from the currency space.
So while talking about the Indian rupee first, it snapped its 2-day winning streak on Friday, and it fell by 23 paise to end at 65.05 levels against the US dollar. Now, fresh capital outflows from the local equity and month-end dollar demand from importers largely kept the rupee under pressure. While Asian currencies were trading lower, as the dollar index, as you correctly mentioned, Jayesh, it climbed to a 3-month high and it crossed the 95 mark. However, it is now trading lower at 94.80 levels. Now, it rose after the US government passed a budget resolution on tax reforms, and on the back of a speculation that a hawkish federal chair may be selected post Janet Yellen's term ends next year, that is Feb 2018. Now coming to back home, dollar rupee is trading at 64.90 levels against the US dollar in the non-deliverable forward market, which indicates a 15 paise stronger opening for the Indian rupee in today's trade. While moving to bond market, the 10-year benchmark bond yield ended flat on Friday at 6.80%, and finally the global funds increased their rupee debt holdings by approximately 660 crores on Friday according to NSDL data.
Well, in terms of brokerages this morning, we have UBS on ICICI Bank, and they have maintained the buy with hiked the price target to around 400 from 380. They suggest that while numbers are in line, there is an issue when it comes to asset quality and operating metrics. The watch list continues to decline, though it is on a slower than expected basis. Of course, there should be visibility on resolution under the bankruptcy law, and Indian accounting standards are key catalysts in the near term. Moving on, we also have have Macquarie on Maruti Suzuki, where they've maintained their outperform with the price target hiked to 10,000 from 8,250. And once again, they suggest that Maruti is the best play when it comes to automobiles in India. Moving in, they're also expecting Maruti to grow ahead of the industry given the new model. And finally, coming down to Nomura on Reliance Power, they have upgraded the stock to neutral from reduced, but also cut the price target to 42 from 45. And they said that tepid near-term earnings outlook is most likely factored in, and the stock is fairly priced. And in terms of Bangladesh foray, should finally fructify, is expected to fructify in FY18.
Well, if you talk about ICICI Bank earnings, well, the net profit missed estimates as it declined by about 33% to 2,058 crores. But a higher gain in the base quarter from capital gains also had a role to play in this net profit number. If you look at the advances growth, that came in at 6.3%, improving from the trend that we had seen in the last 2-3 quarters, while CASA ratio accretion continued in this quarter as well. There was also a sequential increase of 410 basis points in the provision coverage ratio to 59.3%, yet another positive for the bank. And when it comes to the headline asset quality numbers, the gross NPA numbers improved marginally from 7.99% to 7.87%. In fact, the management also said that they expect slippages to be lower in the October to December quarter. As far as their drill down list is concerned, it showed a marginal improvement of about 4% on a sequential basis, while with respect to their exposure to the IBC linked accounts, the bank has made the entire provision of 651 crores with respect to our exposure to RBI's first list. And when it comes to the RBI's second list of NCLT accounts, they have an exposure of about 10,500 crores, of which 98.7% have already been identified as NPA. And when it comes to divergence, the RBI, the bank is still waiting for the RBI's final report and will be disclosing them only in Q3. So to sum it up, while it was a miss on the asset quality front, the street is expected to focus on the improvement on asset quality when it comes to ICICI Bank.
ONGC came out with a weak set of numbers in the second quarter. Revenue was marginally down to 18,965 crore. EBITDA was higher by 3.5% to 9,136 crore, while the margins came in at 48.2%. Net profit was also higher by 32% to 5,131 crore. Net realizations for the second quarter came in at $51.22 per barrel, while in the second quarter crude oil production remained flat at 6.45 million metric tons, and gas production, however, increased by 4% to 6.255 billion cubic meters. Now, revenue, EBITDA margins and net realizations all failed to beat the analyst estimate, but on the other hand, net profit, however, came in above the analyst estimate due to higher other income. Now, during the quarter, other income doubled to 1,931 crore due to higher dividend receipts from its subsidiaries. Now, revenue was below expectations on the back of lower oil production and lower realizations. EBITDA was below expectations on the back of higher exploration cost written off. Now, during the quarter, exploration cost written off rose by 26% to 1,333 crore, driven by higher well write-offs during the quarter. Now, one thing to cheer for the investors was the interim dividend. ONGC announced an interim dividend of 3 rupees per share.
Okay, one of the pharma companies that will come out with the numbers today and pretty much start the earnings season for the pharma sector is Lupin. We are expecting that it will be a weak quarter for Lupin this time around. We are seeing that the revenues will be down almost 5%. We are seeing net profit down by almost 33%. Margin also a big impact on the margins, because we are seeing EBITDA by down almost 15%, and margins will be down to almost 21.5% versus 24%. Basically, both their business streams, API as well as formulation, we are seeing a degrowth of 4 to 5%, so that will be the key takeaway. As far as the geographies are concerned, US will be the biggest one. We are seeing a 25% degrowth that will come in as far as the US market is concerned, and that will impact. India will be strong given the fact that restocking has again happened. Japan and the other markets are expected to do well. Now, what will impact Lupin? Basically, a lot of competition is there as far as Glumetza is concerned, Minastrine is concerned, and Fortamet is concerned. So these three products will take take a chunk of it. Lower cephalosporin sales, it's a quarter in which such sales are lower, so that is also expected to hit the revenues for Lupin this time around. Gavis is expected to be flat. They haven't been able to turn around Gavis, so that could be the pressure point for Lupin. For India business itself, better inventory because of restocking is something that will help the India business grow by 20%. And finally, if you're looking at it, increased competition will hit the high margin products, and that is something that will impact the margins of the company also.
We're expecting an operationally strong quarter for Tata Steel. The revenue is expected to grow as much as 40% at 14,734 crore for this quarter. EBITDA is seen up as much as 91% for the Indian operation business at 3,667 crore. Margins are seen expanding to 25% as compared to 18% in the base year. In terms of the bottom line, we're expecting a five-fold jump out there at 1,392 crore for this quarter as compared to the base year figure of nearly 292 crore. What we expect? Well, both volume growths are out for Tata Steel Indian business as well as European business. In terms of Indian business, we are expecting a 19% growth due to KPO ramp up. That's the Kalinganagar plant ramp up. And also the European business is expected to grow as much as 15% on YoY basis. We are also expecting a sequential decline coming in the coking coal prices. Coking coal price, along with strong volume growth and higher domestic steel prices, are expected to lead to some operational efficiency for the company. Consolidated top line is expected to grow as much as 12%. The company is expected to report a nearly 85% growth in terms of its EBITDA per ton, which we are estimating at the highest side of the business at roughly around rupees 13,500. For EBITDA, well, in terms of EBITDA per ton for the European business, we were expecting a slim growth there of roughly 6% due to lower realization. The key things that we'll keep an eye out for, well, the first will be the coking coal prices sequentially. This combined with the EBITDA per ton performance in terms of sequential basis for the European business, and for Indian business, we'll be keeping an eye out on year-on-year performance of EBITDA per ton.
The second quarter for the telecom companies is expected to be weak, not only because of the seasonality impact, but also because of the higher tax rate under GST and Jio's continued competitive pricing. Now, under GST, the tax rate was fixed at 18% versus the earlier tax rate of 15%, and service providers were not able to pass through this hike in tax rate due to the continued competitive pricing from its competitor Reliance Jio. Now, in the second quarter, two telecom service providers, that is Airtel and Idea, will yet again see their average revenue per user decline for the fifth straight quarter. Airtel's ARPU is expected to come in at 146, while that of Idea Cellular is expected to come in at 135. Now, Bharti Airtel, that is India's biggest telecom company, will see its consolidated net profit decline by 8% compared to last quarter, and while its African business will see growth due to its top line growth and margin expansion coming in because of the cost control measures. Now, Idea Cellular, on the other hand, will yet again see its financials worsen in the second quarter. EBITDA is expected to decline by more than 20% to 1,484 crore, and it is yet again expected to post a loss, and this time it is expected to post a loss of more than 1,000 crore. Now, this could be the fourth consecutive quarter where the company will be posting a net loss. Now, Bharti Infratel, that is a tower infrastructure company, on the other hand, will see growth. Now, its revenue is expected to grow by 10%, EBITDA by 12% due to benefits coming in from the improvement in energy spreads, while its net profit is expected to decline by 5% due to lower other income and higher tax expense. For Infratel, in Q2, tenancy eyes are expected to moderate, but management outlook on the same will be a key thing to watch out for. Along with this, management commentary on any share buyback plan given the high cash on its book and on potential mergers and acquisitions will be another thing to watch out for.
Well, for HDFC Limited, the steady trends in growth and profitability are expected in this quarter as well. If you look at the net interest income, that is expected to grow by 6.1%, while net profit is expected to rise by 9% to 1990 crores. Interest rate spreads are likely to remain stable around that 2 to 2.3% mark, while loan growth is seen in the 13 to 15% range. That's the kind of growth trajectory that we have seen from HDFC in the recent past. When it comes to asset quality, the trend has remained healthy over the past few quarters, lingering around that 0.80% levels, except for a blip in the June ended quarter where the NPA, gross NPA number spiked to 1.12% on account of an exposure of 900 crores to one of the RBI IBC related accounts. So gross NPA number is expected to come in slightly lower than 1.1% in this quarter. But broadly, do watch out for trends as far as the loan book growth is concerned, especially in the light of RERA, the movement in spreads and asset quality trends, especially in the corporate loan book as far as HDFC is concerned.
Well, talking about the stocks and news, the first stock that I have picked up is Hindustan Oil Exploration. Now, the company posted extremely good set of numbers. Its revenue went up by almost 126% to 8.4 crores, while the net profit grew by 90% to 5.6 crores. Even the operating profit expanded by more than 5 times and it stood around 7.2 crores, and the operating margin expanded at 86% versus 38% seen last year. Now, moving on to Bharat Financial, the net interest income grew by 13% to 261 crores, while the net profit was in line with the estimate and it was down approximately by 20% to 146 crores. Now, talking about the asset quality, the gross NPA figures improved marginally and it stood at 5.2% versus 6% seen last quarter. Now, on the flip side, two companies posted weak set of numbers, that is Jubilant Life and Adani Transmission. For Jubilant Life, though the revenue went up by 19%, the net profit was down about 13% and it stood around 144 crores for the quarter ended September. Talking about the Adani Transmission, the revenues went up by 9% at 746 crores, while the net profit was down 33% and it stood around 100 crore, while the margins again fall to 60% as compared to 70% seen last year. And lastly, Economic Times reported that IDFC Bank and Shriram Capital are likely to call off the merger talks as both the companies have failed to arrive at an acceptable valuation. So do keep an eye on both these stocks. Some stock reaction could be seen there.
Based on the delivery data, watch out for United Spirits. The stock was up nearly 18% on Friday after positive management commentary. It saw delivery buying in excess of 400 crores. The delivery volume was up nearly 5 times at 1.5 lakh shares as compared to the 10-day average. The total volume too surged more than 7 times at 6.7 lakh shares as compared to the 10-day average. Bharti Infra was down 8%. It saw delivery selling in excess of 350 crores. The delivery volume nearly doubled at about 83.5 lakh shares versus the 5-day average, and the total volume more than doubled at 1.14 crore shares versus the 5-day average. Yes Bank was down 7.5% on Friday, saw delivery-based selling in excess of 1,000 crores. Delivery volume was up 3 times at 3.9 crore shares versus the 10-day average, and the total volume too was up 4 times versus the 10-day average.
Well, there's clearly a lot to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories that you should consider reading on the website bloombergquint.com. Here are a few of them. Chairperson of the Central Board of Excise and Customs has said that the government's indirect revenue collection target may fall short this year due to disruptions caused by the GST. The government, however, has made it clear that it has no intentions to revise the target. The centre has budgeted collections of 9.68 lakh crore rupees for the current fiscal. Now, Sunil Bharti Mittal, the head of Bharti Airtel, has said that ease of doing business continues to remain a major concern, and he has urged the government to do more in this regard. Mittal highlighted an example of how he got an approval in Ghana in 3 days flat, adding that it takes much longer in India for similar processes. Among countries evaluated by the World Bank, India's ranking has moved to 130 among countries where it is easiest to do business. Close to the first anniversary of demonetization, the Reserve Bank of India has said that notes returned to the bank are still being processed. The central bank has said that it has processed about 1,130 crore 500 rupee notes and 525 crore 1,000 rupee notes. The total value of the processed notes currently stands at close to 11 lakh crore rupees. Well, let's now listen in to Sarvendra Srivastav and Mukesh Singh on the road ahead for the Nifty.
I think Nifty will be range bound and 10,400 will be a hurdle for the week next. So till we don't break out past 10,400, I think it will be very difficult incrementally to add more gains. So I would say a range between 10,250 to 10,400 is what I would expect for the week next.
I'm expecting a bit of a pullback towards 10,200, 10,100. So the same is the case with Bank Nifty.
That's all you need to know going into trade today, but do stay tuned. Up next is Indian Open. This is Bloomberg Quint.